Bitcoin is running out, and you're not ready. Have you been keeping up with the news lately? These days, it feels like every headline mentions Bitcoin. You wake up and hear ETF inflows, countries buying Bitcoin, corporations adopting Bitcoin as a treasury strategy, and so on. The world is turning its attention back to Bitcoin. What is surprising? The very people who once dismissed Bitcoin as a scam or a bubble are now saying Bitcoin might actually replace gold. Analysts who once shook their heads in disbelief are now on camera declaring, "We are entering the early stages of a parabolic rally." What does that mean? Simply put, it's a phase where prices shoot up almost vertically. This often occurs before winter, especially during the second half of the year when capital tends to flood the markets. And right now, we are at that point. As always, the people making real money, they are moving quietly. Hey everyone, I am Neil and welcome to the channel. In today's video, we are going deep into the current Bitcoin setup, what's really going on under the surface, and why the next move might catch many off guard. So, with that said, let's head straight into the charts. First, let's go to the battlefield, the heat map to be more precise. Bitcoin started around 109k, moving sideways in the early stages. It went through a short liquidation line at 109.5k, but stayed range-bound within a corridor, as thick liquidation zones began forming both above and below. Then, the breakouts. The price pierced the liquidation line at 110.1k and launched an assault on the upper zones around 110.5k and 110.9k. However, it couldn't push beyond 110.7k and faced rejection. Following that, it broke down past the support line at 109.4k, dropping to a low of 108.6k. It then bounced back sharply, but couldn't climb higher than 110.5k. The price slowly declined again, crashing through support zones and long liquidation areas, finally reaching 108.5k. Currently, it's moving sideways and seems to be stabilizing. At the time of recording, Bitcoin is trading at 108.9k. Now, let us talk resistance zones. There is light resistance visible as dark green lines around 110k and a thick, compact resistance stack ranging from 110.6k all the way up to 112k. As for support zones, we see strong support marked by yellow lines between 108.5k and 108k, followed by weaker support zones shown as thin dark green and blue lines, extending all the way down to 107k. To sum it up, Bitcoin is currently trading in a tight and uncertain range. We've seen multiple failed attempts to break above 110.7k, while support around 108k is being tested repeatedly. The heatmap shows significant resistance building above, especially between 110.6k and 112k, and support zones gradually weakening below 108k. If buyers manage to push the price above 110.7k, we could see a move higher driven by short liquidations. But if 108k breaks down, the path toward 107k becomes much more likely, with long liquidations adding to the pressure. In short, Bitcoin is at a critical point, and the next move will likely come from whichever side's giving first, so the resistance overhead or the fading support below. And I know what you're thinking. Come on, Neil, you say this in every video. And you're right. But trading Bitcoin means trading uncertainty and volatility. That's the game. It's easy to forget how quickly things change in crypto. We watch it play out day by day, candle by candle. So bear it with me. Alright, time to dive into the CVD and see what the whales are up to. We are still seeing strong sell walls forming above 112k, and that's important. It tells us that sellers are actively positioning themselves there, likely expecting price rejection if Bitcoin tries to climb. Now to the whales, starting with the brown line, which represents large orders ranging from 1 million to 10 million in USD. The green and purple lines, representing respectively 1,000 to 10,000 and 100,000 to 1 million orders, that have driven up the Bitcoin price so far, they are gradually releasing their volume. However, we can see that smaller players are selling more. On the other hand, look at the red and orange lines. The orders from 1,000 to 10,000 and 100 to 1,000. They have been consistently selling and they are still doing it. In short, retail is exiting and they are putting pressure on the markets. No place for small players, I'm telling you. If you see the overall volume in blue, the selling pressure is significantly higher. It is pointing sharply down. To conclude, that confirms selling pressure is dominant right now. Big players are reducing exposure gradually, while smaller retail traders are panic selling. Heavy sell walls near 112k suggest that whales expect rejection at higher levels, and they're ready for it. And retail, they are exiting fast and they are putting real pressure on price action. Right now, the battlefield favors the disciplined, not the hopeful. If everyone's selling, where is the smart money going? That brings us to the next part. Here's the twist. Why are the rich so obsessed with stablecoins? It's ironic. Bitcoin is clearly the main player in the market right now, so you will think the rich would only chase Bitcoin. Yet, behind the scenes, the wealthy are pouring their attention into stablecoins. Yes, hedge funds, billionaires, even investment banks, they are now rushing to create and hold stablecoins instead of just buying Bitcoin. Why? Because Tether is making insane profits. Institutions like BlackRock, Fidelity, and JP Morgan, they are thinking, hold on, Tether is racking in billions in interest income just by issuing a dollar-backed stablecoin? Hey, why don't we make one too? And now, what's happening? Big banks, wealthy investors, and even governments, they are jumping in, chanting, let's launch our own stablecoin. But here's the problem. The general public doesn't want stablecoins. Who wants to pay for the bus with Tether or pay taxes with a dollar-pledged crypto token? We can just use our bank account for that. But the rich say, let's rewrite the rules of this market. Let's regulate it, push out competitors, and make sure only ours remain. So let us ask the real question. What truly matters? Is it the people quietly buying Bitcoin to preserve their future wealth? Or is it the elites trying to profit from stablecoins? Right now, two major trends are playing out. Those who understand Bitcoin's value as an asset, and those who are just chasing a revenue model. At its core, Bitcoin stands for decentralization, scarcity, and censorship-resistant value storage. Stablecoins, on the other hand, they are just another form of centralized digital money. Then, someone very interesting stepped in. Legendary investor Bill Miller. You might not recognize the name, but before the 2008 financial crisis, he was a Wall Street legend, often compared to Warren Buffett. Ooh. And recently, he said this on a live broadcast. Bitcoin is better than gold in terms of storage, mobility, and auditability. The comparison is no longer even close. We often call Bitcoin digital gold. But Miller takes it further. Bitcoin will surpass gold, and it's only a matter of time. Why does it say that? Let's compare. Gold versus Bitcoin. Who wins? Gold is physical. To move it, you need planes, ships, trucks, and sometimes government approval. And Bitcoin? You can send billions in value in 1 second over the internet to anyone, anywhere, at any time. And here is what Miller emphasized: auditability. Auditing the gold at Fort Knox takes 44,000 hours, about 18 months. And Bitcoin? Anyone can verify it instantly with a blockchain explorer. Gold relies on trust, but Bitcoin is verified by code and math. And Miller believes that difference could reshape trillions of dollars in capital flow. So, what's the truth about the billionaires? Many billionaires who mocked Bitcoin in the past, they were actually buying it in secret. Do you remember Jamie Dimon or JP Morgan? Bitcoin is a fraud. Warren Buffett? Bitcoin is rat poison. Yet their institutions slowly embraced blockchain and even built around it. Why did they speak against it then? Simple, to keep the public away. Because once the public catches on, the price goes up, and then they can't buy it cheap. So many big companies spread fear and quietly accumulated. Then, in the 2020s, they changed their tune and have embraced Bitcoin. To a certain degree only, yes, but it shows. The truth is this. In asset markets, truth follows money. Let's talk action. As I mentioned in my previous videos, Tether, Deltec Bank, and other Bitcoin-based investors that have formed a new powerhouse, 21 Capital, just to buy Bitcoin. No other revenue model, no products, just one mission: increase Bitcoin per share, BPS. Meaning, the company values itself by how much Bitcoin it holds per share. Recently, they made a bold move. They bought 4,812 Bitcoins in a single purchase, at an average price of 95,000 USD. Clearly, they think Bitcoin is still cheap at that level. And their goal? Nothing less than market dominance. Other companies are jumping in. Is 21 Capital the only one? Not at all. Suddenly, companies with no ties to Bitcoin are now saying, we are adopting a Bitcoin treasury strategy. Example? A healthcare service provider called Kindly MD just merged with a Bitcoin-based firm called Nakamoto Holdings. A medical company embracing Bitcoin? Why? Because holding Bitcoin boosts our stock price and corporate value. End quote. In short, holding Bitcoin is also becoming a way for companies to stand out and attract investor attention. Companies that were once ignored are now gaining headlines, tweets, and investor attention just by holding Bitcoin. The fastest way for a company to rise? Buy Bitcoin. And in the coming months, analysts expect 20 to 30 more companies to do the same. Here's what matters now. Corporations don't have time. The ones who buy first will gain the stock price advantage. You often hear, why buy now? It hasn't gone up yet. Let's wait until it drops. But the rich, the institutions, the CEOs, they don't think that way. They say, even 115,000 is cheap. Our targets are between 500,000 and 3 million USD. They are not looking at short-term swings. They are watching market share, liquidity, corporate value, and ranking. In short, we are at the starting point of a Bitcoin acquisition war. So why aren't governments buying? Great question. While all this is happening, governments and public institutions seem to be backing stablecoins instead. For example, the Dubai government recently said citizens can now pay public fees, taxes, and even bus fare with crypto, including Tether, USDT, for instance. Sounds exciting at first, but let us be honest. Who really wants to pay their electric bill with Tether? Who's asking for dollar-backed stablecoins? What we truly want is assets resistant to inflation, free from government surveillance, borderless stores of value, in short, Bitcoin. But governments still think like it's 2018. People want digital money? Great! Here's a CBDC or a stablecoin. The problem is, that's just the old system in digital clothes. People are moving toward decentralization because they are tired of centralized money. And now, governments are offering it again with a new name. We are seeing a divide. Government versus the people. Centralized versus decentralized. Control versus autonomy. Bitcoin is just getting started. Let's come full circle. Every analyst, investor, and billionaire is now saying the same thing. Bitcoin is just getting started. Today, Bitcoin's market cap is around 2 trillion USD. Gold, about 20 trillion USD. As Bill Miller put it, Bitcoin is functionally superior to gold. So catching up is just a matter of math. Accumulating Bitcoin now isn't just an investment, it's like buying the entrance ticket to the next financial system. It's like claiming digital land in a new era. Whether you're a government, a company, or an individual, this is your first step into a new global order. Supply is shrinking, demand is rising, time is running out. So remember this line, Bitcoin always feels like it is available until there is not. That was Neil, stay sharp, stay informed, and I will see you in the next one. Bye bye.